What's going on, guys? Welcome back for another episode here on Let It Grow Investing. I'm Jeff. Yes, I took last week off. We had a 2-day tournament outside of town, so I was not at home and I was busy coaching 7 soccer games in a weekend. So, yeah, we were busy. And the market's been busy too, but we are back. Hopefully, you guys got through it without me, but yeah, let's get caught back up. So we got a lot of different things going on. The government is still shut down. We've got some movement in the market. Things in AI are still rolling up. We are all over the place, right? So I'm taking a look here at the S&P. We're looking at the 1 month chart. We are looking at a little bit of sideways downward action. A little bit of a roller coaster ride here, right? So start of the month we were probably 66 and a quarter. And now we're sitting around 66, 64. So a little bit of upside, but yeah, we did have this drawdown, right? We had some drawdown here towards the last Thursday, Friday of the 10th I guess it was the 10th, and then Bitcoin fell off onto the 11th. So I did want to cover a little bit of Bitcoin today as well, right? So yeah, I guess first up, I will take a look at Bitcoin. We're going to go ahead and share this tab instead. We have got some whales bringing Bitcoin back onto exchanges, right? That's essentially what's going on here. There are a lot of people rushing to gold. We've seen that as well, right? Gold peaked out around 4,300, I believe it was. And I'm going to kind of get into why Warren Buffett thinks that gold might not be the best investment. So we're seeing a lot of people getting out of Bitcoin. I don't know if they think that there's a top. I don't know if they think that, AI, that bubble's about to burst and people are going to start, selling out of that or just the market's going to crumble. So they want to get out of Bitcoin. They want to roll back into gold. They could be positioning for something different. Maybe they just want to sell. I'm not too sure, but if there's multiple whales out there, I mean, it could be a case that all the whales talk and they say, yeah, we should probably pull some out. Things are getting a little choppy. Whales are essentially the big time investors that are in Bitcoin for a long time, right? So we're looking at this. We've got dormant whales are waking up, right? BTC that had been inactive for 12 to 18 months moved on chain. On the 15th, 4,600 BTC from the 3 to 5 year age band were reactivated. Since the start of 2025, 892,643 BTC from this cohort have been moved, representing a significant portion of the total supply. So they're coming back online. They were on cold storage. They were off exchanges. Now they are back on those exchanges, ready to be sold or traded or moved or whatever they might be doing with them. So we've got, again, another 7,343 Bitcoin transferred on chain this week. Today, this is probably a couple days old. An OG whale moved 2,000 BTC and still holds almost 46,000 BTC, worth more than $5 billion. If you got in early, man, that was a great. I don't even want to think about how much they spent versus how much it's worth now. It's probably going to make me sad that I did not get in earlier, but I know why I didn't, and it's from the person that I originally heard Bitcoin from. I completely thought it was a scam, a fraud, and just used for a bunch of illegal activity on the internet, and I wanted nothing to do with it. I was probably wrong on that, but I still trust my judgment on not listening to said person. Needless to say, let's go on from that one. So there's a lot of different people bringing Bitcoin back on chain, right? We went from 120,000 to about 112. I think we're sitting around 110 right now. Not the end of the world, but people are getting spooked about the fact that all this Bitcoin from these whales is coming back online. So if they start selling in mass quantity, where does this price go? Does it go back down to 75? Does it go to 90? We don't really know. And how many people are going to be there to buy the dip if the NASDAQ falls flat on its face? Say the NASDAQ goes down 20%. And then all this starts happening as well. Where's all this money coming from, right? So we're looking at that. We're looking at how many people rolling back into gold and why. I did have that article pulled up about Warren Buffett, but I can just kind of give you the cliff notes of what's going on. More or less, he thinks that Bitcoin or not Bitcoin, gold is more or less speculation. We don't really have an earnings report for gold. We don't have a knowledge of what gold's going to be doing that it wasn't doing this time last year, right? It's all in speculation that you buy it now, and maybe in a year, 2, 3, 4, 5 years, someone wants to pay you more for that gold based on the market price at that given point in time. That's the way it's always been. But there's no real prediction to whether or not you're getting a good value when you purchase it, or you're getting, you're overpaying for gold. You're paying what it is at that given point in time as a spot price. I can take a look at a stock and say, hey, the earnings are really solid, but it's trading really cheap and the growth looks substantial. So I can buy this knowing that I'm entering at a good price and things for this company seem to be looking, favorable. You don't have that with gold. Could it be a good store of value if the dollar is deteriorating? Yes, it can. You can exchange your gold or your cash for gold, right? You can do that, or vice versa. But that's pretty much all it is. It's a store of value versus a currency that could potentially be weaker or failing. So a lot of people, with all the different protests that are going on out there, a lot of different uncertainty in the market, uncertainty in the government, whether or not we're going to be working or not. For those people that are still in the government that have not been getting a paycheck, right? Maybe we don't trust the dollar. Maybe we don't want to trust Bitcoin if it's tied specifically to the stock market, which sometimes it is, sometimes it isn't. It had been for a long time, but that kind of went away. So, do we want to trust gold versus holding dollar bills? Do we want to trust gold versus holding bonds or stocks if those things start crumbling? And I think that answer is pointing to yes. A lot of people think that gold is a safer thing to hold than the speculation of other things in the market right now. But I think that's kind of where it ends, right? It's a speculation that it's safer and it will hold value better than potentially what the dollar might in the next 12, 18, 24 months. So, do I think that everyone should have gold? I really don't have much gold, but I mean, I had some in an ETF type deal, but I don't really hold physical gold. I know plenty of people that do. I know people that would rather have metals than own stocks. Some people would rather have real estate. I'm not that person, right? I'd rather have stocks that I can look at. I can say, hey, this is a good value. I'm buying this because of that. I think that it's too cheap. I think that it's great industry, all these different things, right? I'm counting on these businesses to keep outperforming going forward. You don't really know that with gold. I can't say that gold's going to outperform because of XYZ. It's basically more of an economic bet as to what's going on in the backdrop rather than what's going on with these different companies. So, yeah, I did want to cover that real quickly. I did want to take a look at what is going on in some of the earnings reports that we're seeing right now. We're seeing JP Morgan, Johnson & Johnson, BlackRock, Wells Fargo, Goldman Sachs. They were all reporting last week. All of them are a double beat, right? JP Morgan, EPS of 507, beating expectations of 44, revenue of 47.1 billion, beating expectations of 45.6 billion. So, good earnings from banks. Johnson & Johnson beating on their EPS, 280 versus 276, revenue of 24 billion, beating expectations of 23.8 billion. And that 0.2 doesn't sound like a lot, but that represents $200 million. So that's a pretty significant beat in my book. When I have a quarter that's $200 million, we beat by $200 million, I'd be pretty happy about that as well. So yes, it's 0.2, but it does represent a big number. BlackRock, EPS of 11.55, beating expectations of 11.25, revenue 6.5 billion, beating expectations of 6.2. BlackRock now has 13.5 trillion of assets under management, beating expectations of 13.4. And again, another 0.1, Wells Fargo, EPS 166, beating expectations of $1.54, revenue of 21.4, beating expectations as well. So a lot of good news there. So it doesn't necessarily look like the whole market is failing, right? I've seen some people saying we're in a bear market. I'm like, you're out of your mind. We are at a peak. We really are. And I mean, looking at this S&P 500 chart, I mean, yeah, we hit around 67, 64 on the 9th. And yeah, we came down to 66, 64. But that is not a bear market, guys. We're not down 10%. We're not down 20%. We are not down anything that is even noteworthy at this point. You can't just simply think that this thing is going to keep running forever. I will share this screen again. It is just a pretty much a straight climb to what is going on in the S&P at this given point in time when you look at it year to date. I mean, down in April, that was a rough patch, right? That was Liberation Day, everything coming from Trump and all the tariff talks, and then since then we've been pretty clear skies sailing up. Yeah, there's a little peaks and troughs in here, but the overall direction is up and to the right. So we will take that. So, do I think that we are in a bubble? Some things look bubbly, right? Some things definitely look like they are getting to a peak. Things that are in AI, we're looking at Oracle, we're looking at AMD and Nvidia and Palantir and everything else, right? So there's a lot of different things out here that start to look a little bit frothy, right? Stocks like Oracle go from 132 to 291 in the course of 5-6 months. I mean, that's crazy. That is crazy. This is not a small company, but it went from probably 300 and something billion or 400 billion to $830 billion of market cap in the past 6 months. It's insane. So does it look frothy? Yeah. I mean, it's a 72 times multiple. Are they doing a lot of things right? Yeah, they are. So AMD is also getting in onto this because Oracle came out and said, we want to buy AMD chips. We want the MI 450 chips that AMD is coming out with, right? We're looking at the 350s. We've been talking about the 400s. I said that's beginning inning stuff. I said that since AMD was in the 80s, right? I said we are in not even inning one. We are at the national anthem. We are just getting started. And I mean, again, AMD has been on an absolute just a tear. I mean, we were at $78 in April. Again, we're at $233 now. So you are looking at practically a triple in 6 months, a company that's probably gone from 120 billion to 378 billion in that given point in time. So I know there's a lot of people that thought I was crazy buying this at 125. I was probably buying somewhere around here. I was telling you this should be a purchase price right in that space. I didn't have so much excess cash at this point. Coming out of the winter, I tend to wait for some of my winter checks to clear from doing snow removal, things like that. And then, it starts taking off. I'm like, all right, well, I didn't get it at 76. Maybe it'll go up to 110 and come back down. It never did. It just kind of kept going. And then, we got a little bit of sideways action. And then Oracle came out and they said, yeah, we want on board. OpenAI came on board. Everything for AMD has been looking very, very strong. There are still people with buy targets on AMD, right? We're looking at a PE on trailing 12 months at 140. And I'm sure going forward, the future PE is a lot more bearable. So, yes, we only have around 7% of upside. Am I rushing out to buy it at 233? No. At 80, at 110, that was the time where you wanted to buy this thing. That being said, zoom out the next 5 years and you've got to take a look at the growth overall for AMD, right? I think that they have a lot more market cap and market share to gain than what NVIDIA does. Just from the size of the company, just from how they are starting, there's a lot more people thinking that AMD can really move up monumentally versus what an NVIDIA can. Now, that being said, I still see people saying NVIDIA can get to a $7 billion market cap in the next 3 years or whatever that number might be. I'm not saying it won't happen. I was betting on AMD because I know they have a turnaround coming. I know that a lot of things are going well for them. And I think long term, this is a solid play. I am still an NVIDIA investor as well. So that being said, I did see a new high on the street for NVIDIA come out. It is at a $320 price tag, right? We're at 183, average is 225, call it. And that high price on the street is 320. That should have come out this week. HSBC, frankly, CFA came out and said 320 NVIDIA. So we are looking at people saying that those price targets are going up. Now, do we want to continue buying these at this peak, or do we think that things might trade downward and we might get a better entry price? I think we've got a dollar cost average. I think you need to be smart about this thing. That's what I'm going to be doing. I think if you're ready to buy it sitting at 183, put in 25% of whatever you're looking to put into NVIDIA. Now wait 2 months, 3 months, put in the next 25%. Yeah, you could do it monthly, you could do it weekly, whatever works for you. But the point is to spread out these buys so you're not buying all at potentially what could be a peak. Or, it might run to 225 tomorrow and I'll say, hey, I was wrong. Do I think it's going to 225 tomorrow? No, I don't. That's why I want to be mindful about it. So at least if it does go to 225, you are in at 183. And if it goes the other way, you have some cash left to buy when it gets to 160. That's my 2 cents. That's how I try to do this. I don't want to continually just buy in $10,000 chunks. I say that's your number, right? If it's maybe you put in $1,000 for the next 10 months, and that's your $10,000 position if you're looking to start a position in any of these, right? So that is my 2 cents there. You can obviously do what works for you. That's what's worked for me. But obviously do what works best for you, your portfolio, your track, and build your own plan, right? I'm just trying to point out some different things that are going on in the market. So don't be mad at me if you invest wrong. That's the long and short of what's going on there. We are looking at the Fed saying, hey, we might get some more rate cuts. I think the number currently is 3 for 2026. Potentially another one this year. I saw someone saying 25 basis points is likely the number, although it could be 50. We really don't know what's going on with the government. So a lot of these different numbers that we rely on as investors, they are not out. We don't have a lot of these different business reports, economic reports, and some of these other things that we really rely on. So we're kind of flying a little bit blind without the navigation on. We really don't know what's what. We're kind of going seat of the pants, like what feels right. And I think some people are just kind of blindly buying things that might be shiny objects to them. So don't necessarily get caught up in that either. It is tricky to do that and just think that whatever I'm buying is the right thing. I did make a move. I did want to get into this one. Sorry, Dad. We've been talking about this one back since this was ABML. I know you guys have been, if you're an OG of the podcast, you've been watching since this was ABML. This is all to do with China and lithium and all those different resources that are scarce, rare earth minerals, things like that. So I was watching this one. This thing has gotten down to, I don't know, 80 cents or something if I'm looking at the 1 year. I happened to time this one fairly well, right? This was down to 80 cents. Well, I saw this spike. I saw all these little moves. I'm like, all right, $2.50, $5, great. When it got up to about 9, I entered a stop loss. I said, I'm not losing this thing again. I'm not doing it. So I entered a stop loss for all my shares. And then I saw that it continued to go up. So I raised my stop loss up to like 11.30, right around here. It was 11.25, but it triggered at 11.30. I think we got up to like 11.60, and I sold all my shares right at this peak number. And then it just dropped like a rock. I'm grateful that I did it. I'm sad I hadn't done it before. This is definitely one of those ones that's going to be a speculative play. Do I still think that a lithium recycling plant, when EV and everything EV was the talk of the town, this was definitely something that I thought was going to do really, really well. So I had bought into it, right? And we sold it about as perfectly as I think I've ever done on a sell side. And I probably could have posted, here or on Facebook, on our group. I mean, maybe you start a Discord. I don't have one, but maybe I do, right? Maybe we post these in real time. Like, this is the move that I made. This is why I'm doing it. A lot of it was just to protect the capital that I had, right? Similar to a lot of people moving a Bitcoin back on the chain, back on the exchanges. Pretty much that, right? I didn't want to lose the fact that it was at 80 cents and I was just getting destroyed on this on this individual name. I really want to protect the fact that it went up 10x, and I might have still just been breaking even. I didn't really have any gains on this. But man, it feels a lot better to sell at 11.30 versus at 80 cents where I saw this thing sit for so long. I mean, if we look at this thing, you can see where it was. This is the 5-year, and then it just came back down. So I probably averaged down somewhere in here and then just decided to pull the trigger and get rid of it. So that did open the door for a couple more buys. I did add in some more Salesforce. Mark Benioff has been kind of missing, right? These numbers haven't been great for them. I do believe going forward, I do believe that we're going to start to see some resurgence in the stock price. We are looking at a stock that is trading at about a 35 times trailing 12 months multiple. That's not forward. Forward is lower. I believe it's high 20s. There is around 35% of upside here. We do have agent force coming out. A lot of the different things going on out there are showing that Salesforce in general should be looking brighter going forward. So I want to share this one. This is off of Yahoo Finance. And we are looking a lot of different things here, right? I'm looking at this. Salesforce unveiled voice capabilities as part of Agentforce, basically an AI enabled agent that can deal directly with your emails and all the questions that you have if you're a Salesforce customer. Using OpenAI's latest GPT-5 model and Anthropic's Claude model will be embedded into Salesforce ecosystem that enables employees and consumers to interact with the customer data and analytics in ChatGPT, Slack, and other Salesforce software. Company outlined revenue guidance of 60 billion plus by the end of 2030, 10+% organic revenue growth, bold guidance, especially that it is saying that Salesforce constant currency sales have grown less than 10% for the past 5 quarters. So we're looking at larger growth in the next 4.5, 5 years versus where we currently have been recently. The company also will miss its $50 billion fiscal year for 2026 revenue targeted, issued in 2020 and reiterated in 21 and 22. So we are looking for a company that is really going to turn some things around, and those numbers actually reach 41.3, missing that $50 billion fiscal year, and saying that we're going to get to 60 billion by the end of fiscal year 2030. All this arrives as Salesforce sits at a crossroad, and I do agree, right? They got to start making some stuff happen. Stock has lost 26% this year. Lukewarm earnings reports, right? Yeah, we've seen that. And then Benioff came out and said, hey, look, we're setting these numbers lower for the next quarter. We plan to beat them. And this is pretty much where we're at. We're setting a lower target, but we plan to beat that target. So then Oracle, at the same time that we just talked about, is up 88%. So again, is it smart to buy Oracle after it's already gone up 88%? For me, that's a tough buy. I don't want to necessarily be the buyer of gold when it's at $4,300 an ounce. I would rather buy it at $2,500 an ounce. This is basically what happens with me. I'd rather buy the thing that is on sale and looks like it has more potential upside rather than buying the stock when it's at its peak. Now, does that mean that buying NVIDIA or Oracle or Palantir after they've already run up 500, 700, 1,000% is a poor decision? No, not necessarily. But for something in me just says, I need this deal. I want the deal. I want the stock that hasn't run already. And I think right now, for me, Salesforce is one of them. So I came on here, I don't know, a month and a half, 2 months ago and said, I'm buying Salesforce. I'd like to get it to 1.5%. 2% of my portfolio. I've probably got it there. I could take a look. In fact, I will. Kind of doing this in the background. You guys get stuck with the Oracle Salesforce ads. If I'm looking at my Salesforce numbers, let's take a look here. We are at 1.96% of my portfolio. So I'm there. I'm where I said I was going to be. I hit that target. I'm still thinking of buying more. At the same time, I've been buying Adobe. Adobe is currently sitting at 0.77% of my portfolio. I could potentially buy some more there. I do believe that Adobe has a lot of room to run as well. I kind of came on and said both of these, everything in software right now is getting pummeled. They're not directly related close enough to AI to get to where, you're in that AI boom, you're in that AI rally. They also think that AI might take some of the wind out of the sails of Adobe and Salesforce. So not as many people rushing to buy these things. We've got Adobe. I'm looking at a stock with around 37.5% of upside, sitting at 333, average price being 458. So there is a little bit of downside risk. Could it go down? Certainly. Is AI a threat to them? Yes, I think that it is. I still think that a lot of creators are going to be using Adobe. I probably lean more on ChatGPT for thumbnails and things like that. Otherwise, it's just me talking into a mic with a webcam. I'm not too involved, but I know there's a lot of creators that do a lot more editing. I really think those are going to be the ones that are going to be doing more on Adobe, using Photoshop or whatever video editors or everything else. I'm not that guy. I keep this kind of simple. We roll right into what can I do right on Riverside or Spotify, throw it all together and get down the road, right? I don't have time to be editing for 4.5, 5 hours to put out one episode. I just don't. So for me, it might not be my top tool, right? But I think a lot of people are still going to be leaning into AI. I know, or Adobe. I think that Adobe embedding AI into their software has a lot of purpose. I think that a lot of people lean on that, and they're going to be using that right on, Adobe to get the job done. So I don't think that that's necessarily going to change. I think that Salesforce is in the same bracket. Salesforce around 35% of upside. So both of these I've been buying fairly heavily recently. I sold out of ABAT. A lot of that money rolled back into these two. I sold some other stuff as well. Let's take a look here real quick. Bought some Adobe, bought some MicroStrategy, the ETF there that's paying crazy dividends. Sold a Palantir covered call. Made $236 for one call at 240. We're sitting at 180. I really, really do not think or hope that Palantir gets to 240 by November 21st. We got about 32 days to 31 days, something like that, to figure out if this is actually going to happen. I don't think that it will. Nike, I bought some there. That's kind of trying to rebuild that position. I do believe that that thing's going to go up. Once they get out of direct to consumer, we start maybe not get out of direct to consumer, but not lean so heavily into DTC, get back into stores, lean back into their main business and main drivers of growth, get away from all of the political garbage and nonsense that all the woke stuff that they kind of got into. Again, more CRM, some more DraftKings because I think that's undervalued at 35. Sold ABAT, again, CRM, more Nike. Kind of forgot that I was buying Nike as well. But that's what I got going on this week. So all that being said, do I think that we're in a bubble? I don't necessarily think that we're in a bubble. I think individual stocks are in a bubble. Do I think that everything can be purchased? No, I don't. Do I think that some things should be bought? Yeah, I do. I'm showing you the ones that I like. I like CRM. I like Adobe. I like Nike. I was listening to the Starbucks CEO. I'm still not sold on that. I'm still not sold on a lot of different things. But needless to say, those three I do like. And I mean, there's still a lot of healthcare stocks that really do make sense to me as well. This past week, I did not have an episode. I did go out and buy, I think it was Lilly. I think I went out and bought some more Lilly because I put in the $200. I want to say it was about a quarter of a share. So that leads me to think it's either Lilly or Costco, but I'm 95% certain it was Lilly. But both of them make sense here, right? So do I want to go out and buy what this week? What are we looking at? If I had to buy one of the 13 that is on my handy post-it note of what to buy this year, NVIDIA, Tesla, Meta, Amazon, Lilly, Next Era, CrowdStrike, Costco, Bank of America, AMD, or IBIT, which is the Bitcoin ETF. I do like the fact that Bitcoin has come down. I just am scared by not knowing what these whales are going to do and where this is going to go. So I might sit on my hands on Bitcoin. NVIDIA doesn't have enough upside for me at the moment to be so overwhelmed that I have to buy it. I do like the name a lot. We were just looking at this one. I should know the numbers. There's 22% of upside. That's not bad at all. Tesla's okay, probably negative. Yeah, I figured that. Oh, I did want to mention that Google is taking Waymo to Europe, so that could be another driver of growth. Zuckerberg and Meta, just announced plans to invest $1.5 billion to build a gigawatt-sized data center in Texas. So still building out more there, probably more for AI and everything that they're doing. Do I think that Meta has some more room to run? I was hoping for 800 by the end of the year when it was in probably the 400 range in April. I'm sure someone thought I was crazy. And here we are at 717. I probably said 700 to 800 range. I still think we could get there. The year's not done. I still think we got plenty of time to move up to 800. I do like Meta. I like the fact that they're leaning into this and they've got a lot of different things going for them. Amazon, man, I still think Amazon just runs such a good business. Bezos has less than 10% of Amazon as ownership now. They've got about 25% of upside. Man, a lot of these really have got some room left to run, guys. Nvidia was 22, Meta was 22, Amazon was 25, Lilly was 15. Trump did say that he wants to get the price on GLP-1s down to $150. That did hurt Lilly and Novo at the same time. Shots were fired. So that is hurting Lilly stock a little bit this week. Next era, as far as energy, I don't know that they're going to be the ones that's going to be making enough if it's solar or not solar, but nuclear. But I do think they're in the right space, right? Everyone needs more energy right now. We don't have less stuff to plug in as time goes on. Maybe not the most upside and could be a way to protect some investments. I don't think that utility companies are going to take the brunt of the market on the chin if things do go south. So next era makes sense in that regard. CrowdStrike, only about 5% of upside. Do I really want to lean into this thing if things go south? No, not really. That's not enough upside to get me excited about buying it if things go poorly. Costco, COST, probably a decent amount of upside there. We did add to that recently, 16%. Maybe we roll back into some more Amazon. It never hurt buying it before. We've got a lot of it in the investing challenge portfolio. We got around 25% of upside. I do like the business. We order from them all the time, whether it's for my business, for food for around the house, whether it's whatever you need, they've got it and they can get it to you quicker than anyone else. AWS and everything else has been firing really well. I know they're leaning heavier into advertising and things like that. So maybe Amazon makes sense right here. Bank of America is going to be more of a play on rates and what people are doing. And I don't know that that's not what I clicked. Not BACQR. I don't even know what that is. BAC, there we go. We've got 2% of dividend yield. PE's at a 13.7. Bank, that's fair. I'd maybe go for more like a 10. Only about 12% of upside. I'm going to go with AMZN for Amazon. That's what I'm buying this week. So if you are following along with the investing challenge, that is what I'm buying. With that being said, that is all the time that I got for this week. So hopefully that gives you a little bit of clarity as to what's going on in the market, why Bitcoin is being a little bit volatile right now, why I'm not looking to necessarily buy up the dip that is going on right now. Maybe around 90, I'll start taking a look. Maybe, load the boat if it gets much cheaper than that, and wait for some bluer skies. I'm not buying gold. You can. That's completely up to you. And maybe you want to buy gold when it's at the peak because you're scared of what the dollar is going to happen to it or Bitcoin or whatever else. But then again, hey, if you're one of those whales that's got 4,000 BTC sitting and you want to diversify into some gold, by all means, go ahead. Take a couple $1 million and go buy some gold. More power to you. I don't have that much BTC. I'm not going to lie. I don't. So, there it is. So that being said, get out there, get invested, stay invested, and just try to protect the assets that we've got built, guys. So thank you very much for stopping by, and I will catch you in the next one. Take care.